I can't eat my shares. I'm looking for maximum value on a per share basis. I will show you how I believe this is a 10-bagger in waiting. My friend Rick Rule would say, in this game, there are if questions and when questions. This is not an if this happens and if this happens. It's a when.
How do you make it happen? What's the plan to monetize that? Welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do give us a thumbs up, much appreciated. And also, could you leave your comments below? It just helps us understand the types of questions you'd like us to ask, how you think we're doing, and indeed what you think of the company. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, you can click the notification bell. We spoke earlier today to Gianni Kovacevic, who's the CEO of CopperBank. They are a group who are doing optionality plays. They're buying up copper assets, which they think will have some future value. And we talk about the business strategy and plan behind that and some of the names involved in it, some pretty big, well-known names in the industry. So take a look in the description below at the various topics that we discuss. Anything interests you in particular, click on the timestamp. That'll take you to that part of the video. So enjoy what Gianni had to say. Hey Giovanni, how are you doing, sir?
I'm up and got my coffee going at 6 a.m. in Vancouver, and everything's going really well. Thank you.
Wow. Early start. I'm impressed.
You have to on the West Coast.
You do, yeah, you do. Well, look, why don't we kick off, give everyone who's new to the story a 1-minute overview, and then we'll pick it up from there.
Yeah, so the CopperBank is an optionality play for copper, where we've acquired established assets. We like the United States because of, for all the reasons that people probably should know, including now a 21% corporate tax rate. And from my understanding, it's where mid-tier and larger copper mining companies, that's where they want to focus as one of the key jurisdictions for the next 10, 20 years. Private property, and the fact that it has a long, 150-year history of copper mining, particularly in Arizona and Nevada. So we have these assets. We have a dedicated team. We're owner-operators. We self-finance. We don't issue warrants, and we treat it like a school bus. So when the copper price, in my view, as it increases, there's a lot of torque on a per-share basis with the company. And of course, we like to provide the evidence to all the mid-tier companies that we meet along the way, and on how we can grow our assets and de-risk it in the future.
Beautiful. Thanks very much for that. I always like to try and understand what's going on in the heads of the management team. So you are, owner-operators, I get it. Tell me, what was the big idea when you started off? You obviously like copper, I get that, but maybe you can tell us what's your background, why copper, and what it is that you're trying to build here. And if you don't mind, I'll maybe ask questions along the way.
I've speculated in junior mining shares since about 1995. That's when I opened my first account. And as anyone who's ever owned or followed junior mining, it's really high highs and really low lows. Feels great when you're making money, and it's just such an empty, gutted feeling when there's no end to the misery. Once you've seen a couple cycles, you actually embrace that volatility because you understand it is going to come again, and these market caps or the share prices fall. It's incredible, 95%. But along the way, when good people are moving their businesses along, they're able to raise a lot of money at high valuations in the good times. Exploration is completed, and then they throw the baby with the bathwater. So in around 2014, 2015, we were already 4 years into a bear market, 3 or 4 years. We like to finance junior mining companies, but we had the opportunity to buy the whole project, which is what we did. Aggregated a few friends, put a little bit of money together, so we could pay these holding costs and pay the legal to reconsolidate everything. And we put them under the CopperBank umbrella to hold the projects. And ideally, we wanted to acquire like 7 or 8 or 9, but it's hard to find. There simply aren't a lot of developed copper projects in good locations with management teams that wanted to do a progressive deal with you. And lo and behold, 10 years later, we're still in a bear market. We've had a couple of little false starts, and in the 2018 dip, we bought yet another project. So we embraced the volatility and understood that creatively, it was beneficial for us to buy pounds in the ground rather than go drilling. Why should I go spend $1 on the dollar to drill when I can buy drilling for 5 cents on the dollar? And then we're now in what I believe is this decade is going to be the decade of copper, and it's electrification. And when you understand what's going on with the majors and the mid-tiers, grade is falling. It's getting far more difficult in every jurisdiction, including Peru, including Chile, to permit and move forward these projects. It's going to be these things are going to collide together. Very steady demand post-COVID, because this is going to be a huge amount of stimulus towards electrification infrastructure. And no matter what happens, it's very hard for the supply that's going to keep it grow at the same CAGR. So there's going to be, I believe, a price reaction in copper, and then these optionality plays. All of a sudden, eureka, people are going to start focusing a little more on them.
Okay, so let's break that down a bit. So you obviously like copper, and you can sort of see the trend, and EV thematic suggests, the numbers all suggest that we're all going to be driving around in electric cars soon enough. So you're buying into that. What do you mean by this is an optionality play? What should people try to understand from that?
If you're a speculator, so this is the classic type of investment for someone who is a contrarian, looks at something. It's like if you go into the options market, and we just saw a classic example with oil, it went negative, and it was basically a bunch of unsophisticated retail investors using products, figuring once oil gets to a certain level, I can't lose. But of course, the more sophisticated traders, look what happened. So options, unfortunately, have a time expiry. So when you're buying real estate with respect to a oil resource or a copper resource, if you own the real estate or have those patented or mining claims, which in the United States are good in perpetuity, long as you pay the annual holding costs, that has no time expiry. So this optionality play is buying copper in the ground at a fraction of its cost. And by that, I mean, if you look at not just CopperBank, but there are many companies that are trading at, 1/3 of 1 penny per established pound in the ground. Okay. And the transaction value of everything that occurred from about 2006 to 2011, sort of the China boom, these deposits were selling for 3, 4, 10 cents per pound in the ground. So if you ever get back to that kind of market, you could see buying something at 1/3 of a penny per pound in the ground, and then all of a sudden the majors and mid-tiers start buying these things at 2, 3, 4 cents a pound in the ground. That's optionality. But there's another thing to reinforce that, because we just went through an unprecedented level of spending with respect to exploration on a global scale, from the biggest companies, Rio Tinto, BHP, all the way down to the juniors that on the TSX and the ASX that raised countless billions of dollars that went to money heaven. We now have data, we have math that tells us it costs approximately 3 or 4 cents to delineate a measured and indicated copper pound. So if you want to find a deposit of merit, a porphyry that's got 5 to 10 billion pounds, it takes time, it takes teamwork, it takes capital, and effectively, $200 or $300 million is what you're going to have to spend. So once again, it reinforces as a mid-tier, well, why would they pay 2 cents or a penny and a half? Because they know there was a lot of failure. So let's go and de-risk what's already been discovered. There's no sense going and paying that again. So we believe that scenario will come into play. You just have to be not greedy. You have to be a very fair partner and make a fair deal with a company more senior than yourselves.
Okay. I understand what you're trying to do. If I look at back at 2017, share price about 16 cents. You're about a quarter of that today. Do you think the market just doesn't understand what you're trying to do? Or put it another way, do you think you've done a good enough job of explaining to the market what it is that you're trying to do?
I'm glad that you picked that up. So for people that are hearing the CopperBank story for the first time, or those that have followed it since 5 years, when we launched the strategy, we put together our money, $1.6 million at 10 cents per share. At the last minute, the people who were buying the projects, they wanted a warrant. We don't do warrants. Okay, so we set the warrant price at 50 cents, way out of the money. So everyone has to make a significant return for that to be crystallized. The next day, remember, we issued shares, free tradable, because it was a prospectus level offering, November of 2014. We put 1.6 million at 10 cents. The next day, our stock went to 3 cents. and it traded sideways for 15 or 16 months. We bought back about 70% of the shares that we issued from those people that just wanted out. They were losing, whoever sold their shares was losing 90, 95, 97% of whatever they paid for them once upon a time. I was happy to buy those shares. I acquired my first 15 million in the market, paid for them all. There's no check swapping or none of this nonsense in our company. But I told the story. I went on the road for 15 months. Anyone that knows me at every conference, I just told people this is an optionality play. This could be explosive to the upside. So we went in that period, in about 4 months, our share went from 4 cents to 18 cents. And I'm getting calls saying, what's the program? What are you doing? Are you marketing? I said, I'm doing nothing. I'm doing nothing. I simply told the story to many thousands of people, and they started to buy this like a copper ETF. So we know it works. And even after that period of time, we've had 4 or 5, you can look at the chart, 4 or 5 periods where within 2 weeks, our share price doubles. That's the volatility of the CopperBank share. And we still have not been in a market where there's euphoria with the price of copper. We got to that area just before the China trade tariffs in 2018, where the copper price was around 320, 330, and the CopperBank was 12, 13, 14 cents, 10 cents. But every single time that we had to raise capital for our property payments, we always did it at a premium without a warrant, just to maintain that. Why should someone buy our shares on the open market rather than wait for some financing like they always do? Every single time, including, you'll see in the next 10 days, we're doing a little top-up financing, 2 people, me and 1 other person, and it'll be done at 6 cents with no warrant. So it just reinforces that you can still participate with us as a speculator here at the 5 cent level. So that's what happened there. Actually, nothing was going on other than the fact that people gravitated towards, this is one of the instruments that they were using, certain speculators, to participate in the rise in the copper price.
Are you frustrated by this process? People just not understanding it. So I get when you go and talk to them, you bump the market up, there's a bit of volatility along the way, but general trend is down. It must be frustrating.
I eat my own cooking. So let's go back in time. If you do an audit of when did I buy shares, I have about 7 or 8 pages of insider buying. Whenever our share price got to these critical lows, me and my team put up, I would say, hundreds of thousands of shares of bid support, if it was ever to get to those levels, because of course I'm happy to buy the shares. And I consistently go here and there up to the offer to participate every month, every 6 weeks when we're not blacked out, to buy shares. So I now have tens of millions of reasons to want CopperBank to succeed. So I'm not doing it because I'm a nice guy. I'm doing it because I firmly believe, and we will reinforce that case for anyone watching so far. I will show you how I believe this is a 10-bagger in waiting. And it's not because of, as my friend Rick Rule would say, in this game, there are if questions and when questions. This is not an if this happens and if this happens. It's a when. When the copper price is at different levels, because it gives confidence to the mid-tier and senior mining companies, people that I know, where the C-suite tells their team, go and replace reserves. Go and you have more money to do resource exploration. Okay. And that's where we engage with them.
Okay, so let's come back to that, because you've struck upon a topic there which I think is relevant. Is, it's no good just saying, hey, I've bought copper assets. There's good copper assets, there's bad copper assets. Just like it's no good saying I'm going to buy gold because gold's up. You got to pick the right gold assets. So maybe if we can talk about some of the things which the company owns today, because you've got assets and you've got royalties, or talk of royalties. So can you just talk us through how you go about identifying and qualifying and vetting what you invest in?
Very good question. In sales, they say never argue with the customer. So I've been on the global conference circuit for about 12 or 13 years. And I started to do keynotes where I would talk about energy or copper. And through that, you start to meet certain executives, senior executives. I'm talking of the top 10, top 15 copper mining companies in the world. And some of these people you get a friendship with. And you can understand their methodology, why they do certain things, why they don't do certain things. And I will tell people right now, and I can say this in the strongest possible way, there has never been in the history of resource extraction where the CEO has an idea and he demands that his engineers and his team, no, you will work that project in that area. No, they don't. They quit. You need to have the buy-in from the technical group and from the C-suite. And they have to work together. And that's, of course, they often do, because it'll come from the technical group. They say, we like this project, and they put it up the food chain. Or it'll go from the food chain and say, hey, guys, what do you think of this? This is an interesting opportunity that we could partner. And when those two things are in harmony, that's when partnerships can be created. So we have a technical group in CopperBank, 8 different people. Most of them work with senior mining companies, very connected. And I can say that we're 1 degree of separation from the entire industry. I may not know everyone, but someone in my group is tied in with all the major companies. So we understood where they want to be. Where do they want to focus resources in the next 5, 10, 20 years? And I will tell you that, and I could say firmly, Arizona is a key jurisdiction. Nevada is a key jurisdiction. Peru and Chile are still there. A lot of interest is because of the geology, and they're open now to Ecuador. We're going to see what's going to happen with Colombia, but I think Ecuador is there for some advanced development. Mirador and Fruta del Norte have now been developed, and people are monitoring how that goes. But I would say Arizona is one of the key jurisdictions. So whenever we were acquiring a project, it had to have 3 criteria. 1, can we send our children to work there? That's our risk tolerance. Number 2, has the project had a significant amount of capital spent on it, because we're buying, optionality plays. We don't want the additional risk of, does the metallurgy not work? Is the ore body so bad or so flawed? Is the infrastructure so flawed that it'll never become a mine? And the third one is, will someone more senior than CopperBank actually entertain the idea once their team sees the evidence and the science on how we can make these things, either the quality of the resource better, or we can increase the size of the geological body. And the projects we have fit that bill.
Okay, well, can we talk specifically about that? Because I get the jurisdiction thing, of course, and you're right, there's some great countries, especially Ecuador, coming into the fray now. But in terms of the quality of the asset, that's what I'm actually interested in, because you talked generically there. Let's get into what you've got, and what made you go for it, because people don't get rid of the good stuff, right? And you weren't coming up with tens of millions of bucks here. It was of a certain stage, of a certain standard. So what was it that you were after? So
our first project, Copper Creek, we could talk about first, and it's located in Pinal County, Arizona, which is north of Tucson. It's in the Copper Corridor, the so-called Copper Corridor. There are 2 major geological trends in Arizona. There's the one that goes north-northwest, and that's where you have Resolution and Ray and those operations. And then you have the other trend that goes north-northeast, where you have Miami, Globe, Morenci, and all those operations. Those 2 trends intersect exactly at Copper Creek. So Copper Creek has what is the largest concentration of these breccias in North America, over 400. And they were drilling them, and only 10% have been drill tested to date. So the group that owned that project before us, they moved it forward. They invested about $85 million US, 220,000 meters of drilling, concentrated in the central area. Parallel to that, they were able to acquire various different patented mining claims, different partnerships, consolidated to one large 16 square kilometer package, 16 square mile package. So we believe that the other 350 some odd breccias need to be further explored. And we're starting with a resource that IMC put a 43101 compliant resource in 2012. Now, it's not contemporary. We don't consider this to be contemporary, but it was done to 43101 standards, and people can look at all the disclosure within our presentation, and you can see where the starting point on that project is about 500 million tons of measured and indicated, and roughly the same of inferred. So just short of 1 billion tons of all category copper. So we believe that, and we are showing this to various groups, to go and partner with us to do further exploration drilling, to go and look at these other 360 breccia pipes.
Okay.
So that's the first project,
Yep.
Copper Creek.
Okay.
And we feel that that's going to be a project that is going to be interesting for a lot of different groups to partner with us. The next one we have is It's called Contact Copper. It's located in Elko County, Nevada. Now, this is a smaller project. It's copper oxide, so amenable to the S60W type of operation. And that has 86,000 meters of drilling. And with S60W, you have to have an arid landscape. You have to have close proximity. You have to have water. You have to have electricity. Ideally, close proximity to acid. And of course, there should be a private property component. We're going to have to do heap leaching there, and that project was moved forward by a group here in Vancouver, Canada, owned by one fellow, Arnold Armstrong, who over 30 years was able to cobble this together, including the private property, which they invested some $4 million to acquire. And now we have a PFS that was put out in September of 2013, which does need enhancements, but the fatal flaw in this project, it does not work at 250 copper. This project requires, according to the PFS, $3.20 copper, and ideally $3.50 to really make the project work. And there are groups that they like these cathode on-site type projects, these SXEW operations. So we would like to be able to move that forward and ideally partner with a group that's looking to sort of augment their existing portfolio.
Okay, brilliant, thank you. So just on Copper Creek, I mean, that's a lot of $85 million spent on it. That's a lot of money. They got it through to PEA level back in 2013. So you obviously have some sense of the economics back then. You'll need to revise that and optimize that, I guess. But you're looking for a partner to come in and help you move that forward. That's what you're saying?
Yeah, unequivocally. I'm not building any copper mines. We're not qualified to do that. We treat it like a real estate holding, and that PEA was done as a shallow underground mine. We think the methodology there should be to go and do a significant exploration program around the vertical drilling they did at the current resource. I think that needs to be done, and it has to be done methodically. It'll take multiple years, and it'll be, really a larger budget, and it can only be done by a larger company. This should not be something done by a smaller company. You have to have the bandwidth and the ability to really delineate and so is this going to be a shallow underground mine, or is this going to be a large open pit? And that is unknown. That's an unknown at this point.
Okay, so can you give me a sense of the type of deal that you'd be looking to construct there? Because obviously, with a market cap like yours, I guess anyone coming in is going to feel that they're on the front foot. But you talk a very vociferous language there, and I think you will argue the case. But what realistically do you think you're going to be able to put together, or what do you want to put together? Because I'm assuming those conversations haven't yet started.
Yeah, well, traditionally the smaller companies are doing these joint venture type deals, where if the larger company spends so much money, you get to earn X percentage. Because we're owner operators and because we're investors, there's all kinds of deals that could be possible. So I can't eat my shares. I'm looking for maximum value on a per share basis. And I want to turn, as the exit strategy, as people all understand, the best outcome we can have is to be taken over. And because CopperBank has various different assets, it won't just simply be, the company. It'll be the project, which means CopperBank survives, or if it eventually becomes a shell company with cash, we will always be looking to do something else progressive within the copper space. So I think the best outcome that we would have, and something that I would put forward to our board and for our shareholders to vote on, would be simply either a share, which we give back to the shareholder from a larger company, or a cash takeover of that individual project, which we would then look at, of course, returning that cash to our shareholders, keeping some in the kitty to look for another undervalued opportunity. And like I say, everyone in our team, they own tens of millions of shares. We're highly motivated to do something like that. I can reinforce that statement. Usually these junior mining companies, people are surviving. They're doing it because of their stock options. They don't have a lot of equity. Everyone in our group is motivated by the equity. So when Julio Bonifacio, he's my chairman, when he retired from Nevada Copper, he came in, he wrote a check, $700,000 hard dollars, no warrant, came in, he's a partner. He has not so much as expensed a sandwich since he's been involved with the company. And it's straight equity. So even our options, other than the new member that came on, my options expired, my original option package, they have never been reset. The options is a small portion of my compensation. The shares that I've paid for is 95% of my compensation. So we want to see something progressive happen there. So I would say we're very aligned with our shareholders.
You're very aligned, and I guess what I'm trying to get, and you're very incentivized because everyone's kind of underwater, so you all want it to happen. What I'm trying to get at is how do you make it happen? I don't know how long you've had the asset, but how much has been spent on it? Have conversations begun? Is there a plan to try and monetize that so you can all recoup what's been spent so far and hopefully get some upside to it? So what's the plan just on Copper Creek, say, for instance? What's the plan to monetize that?
Every company will tell you that they have all these non-disclosure agreements with how many senior companies. We're no different than them, and when the market becomes very negative, frankly, it's a buyer's market. So we would look at acquiring something. I am not going to sell real estate in a panic environment. That makes no common sense. So I think if a fair deal presents itself, it's not going to present itself next week because look at where we are. I would say that earlier this year there's a lot of interest in visiting the project and understanding the type of geology, and we have all of our core is very well organized. It's adjacent to the project in the town of San Manuel, so people spend days at a time analyzing the data, and that's what we paid for. So it's a buyer's market right now. I think that at these levels we would not be selling a project unless it would have a significant premium.
Great. Okay, I think that's where I wanted to get to. You feel like you're sitting on some real estate. It has some value. You need to wait for the market to recover. Obviously, COVID-19 hasn't really helped, certainly with the battery thematic. There's a few, I think supply chains there have been sort of devastated, to use a phrase from a CEO we interviewed this week. And you've got a very low G&A. I think you make a big deal about it in the presentation. Your overheads are negligible.
We can talk about that. I can show people exactly why. Why is the G&A?
Yeah, I mean, talk to that. Why is it so low?
So people look at our technical group. There's if they understand, I don't pay $1 in compensation to that technical group. Not one. They're all aligned with the shareholder. I don't even pay rent. So our headquarters in San Manuel, the group's previous, acquired the building and all the development land in the town of San Manuel. I just have to pay property tax, a few $1,000s a year. In Vancouver, we have no office. We're not paying any office rent there. And also along the way, these groups, both in Nevada and in Arizona, in excess of $10 million has been spent acquiring real property. So the access ranch to Copper Creek, they bought it. The final payment was made by Anglo American when they had a joint venture with the previous operator, Red Hawk Copper. They paid the last $400,000 payment. Okay, and along the way, there's all these other. If you look at the presentation, everything in purple and red is private property in Copper Creek. Everything with the Nevada project, the ranch that Arnold Armstrong bought, 2,650 acres, including many of the building lots of the town of Contact on the way to the project. We own that. That's real property. He spent $4 million along the way buying that all up. So it's unusual for a junior mining company to talk about their real estate holdings. And of course, a lot of this is associated to the projects, but it's worth something, and more importantly, it doesn't cost me anything to maintain that. And then we have our BLM claims and our Arizona state mining claims, which are modest. It's about $90,000. And in the BLM claims in Nevada are $37,000. My audit, we just completed it, $26,000. That's what I'm paying Smythe. So when you look at those costs, and we simply don't have them. So now that we've streamlined the business, our Pyramid project, which was one of our earlier holdings, it was that option was terminated by the Aleut Native Corporation. We didn't spend any money on the project for a couple of years, and we decided to focus on these 100% owned private property projects in the lower 48. And we're looking at other opportunities. I would say the word there is accretive. It doesn't matter how low our share price goes. We're buying something. If we buy it, it's going to be yet accretive to where we are on a per pound basis. So that's why now, if our share price was to never go higher, which I believe it will, but if it was to stay here in the doldrums, we have about 2% dilution per year to maintain the portfolio. And we will not be going to the street for that. I'm not going to be issuing warrants. We will simply self-finance this, and people will see that we typically do this slightly above the market. And it's always done. Very important. because you're doing this in-house and it's one or two investors, every time we issue those shares, they're not coming back in the market. Because if you're issuing shares with these warrants, people recycle the cash. So where's our inventory coming from? Well, we issued shares to buy projects, and it's understood they were already in, it was a calamity, and then sometimes they just capitulate, they just get out. But anyone who's selling their shares is losing 95% of what they paid for them, based on the previous operators. Everyone in my company, I've consolidated my position. I bought a lot of stock at 4 cents, 5, 6 cents, and my financings were done in reverse order: 6 cents, 7 cents, 8 cents, 13 cents, 15 cents, 12 cents, right? Progressively higher than where the share price is today.
Okay. So just for this, keep this simple for everyone at home. When you were saying earlier it's an option play, it's an option play because you're financiers and promoters, really. You're not miners or explorers. You're buying a copper asset which will have, you believe, a significantly higher in the near future than it does today, without having to do very much at all, because there's a lot of data. People have spent tens of millions of bucks on these things, and you think that has some value which is not necessarily being reflected in today's share price or market cap. Is that a fair summary?
Exactly. Let's get to brass tacks. My market cap, if people buy my stock today at 5 cents, that's a 15 million Canadian market cap. So that's 11 million US dollars. Okay? 11 million. Why do I think it's a 10-bagger? There's 120 million US has been spent on the portfolio. That's a 10-bagger. The optionality on an MPV basis, because we do have economic studies, one was they're both published in 2013. Now, we believe they can be enhanced. The lower tax rate's got to be brought into that, and there's other things that we can do. Of course, we want to grow these resources. But just based on those studies, once the copper price goes above $3, because they're uneconomic, just like most of the projects in the world are uneconomic under $3. But on an MPV basis, if I never issued a share again, of course I have to do this, 2% dilution per year, but just go with me for a second here. Every 25 cents that the copper price goes higher, above $3, the net present value of the portfolio goes up by 300 million US dollars. So that's, so at 325, at 350, at 375, that's $1 a share. Think of the torque on that. So every 25 cents that copper price moves higher, we get to a 350 copper price environment. Once again, you get a 20x type return. And copper development companies will typically trade at about 10% of the NAV. Some trade at 20, some trade at 25, go on the low end of the scale. So if we simply trade at 10% of our NAV, our NPV collectively goes through $1 billion after you get through 350 copper, 375 copper. So that's at 375, it's $4 a share on a net present value basis. So if I capture 10% of that, that's 40 cents a share. That's an 8-bagger. Haven't done a thing. That's why I believe our share price had such an explosive response in 2017. So that's something that we're looking at, and that's why we have to maintain the per share the value on a per share basis.
Okay.
Does that make sense?
It's one way of calculating it for sure, but we have talked to companies with NAVs of $1 billion, and they don't achieve those sorts of numbers. But there's lots of variables which will affect people's ability to believe, and the sentiment around it is the commodity is important. The management's ability to tell the story is really, really important. But mostly it's about, can this thing get into some kind of economic production at some point? People have got to believe that it's capable of doing that. So, I believe in the copper thematic for sure. And I think that you need to, help people by telling this story, more and more to people like us, so they get the optionality play, because there's not too many people with the optionality play going out there. There's normally miners trying to tell you how they're going to get this thing into production at some point. So, you've got a very different model. There's nothing wrong with it.
Let me give you one more metric. So if you could see a scenario where the more senior companies their teams are looking for exploration projects for them to move forward. And if they understand that there's been a lot of failure, and they're not going to go back to certain areas, and they're not going to go looking too much, green fields. They want to go back and look at these projects that have been delineated, and can they enhance the geological footprint? Both of our projects have that ability. So then the metric is they already know in-house it costs 3 or 4 cents to delineate a copper pound. They already know that. So if we look at a metric, and you asked me about 10 minutes ago, what's a good starting number? If I was to say to someone, how about we go 50% of the money that's already been spent on the project? How do we work around that as a starting point? If you look at it in one way, they're getting a good deal on the existing drilling. They get access to the project eventually on a 100% basis. So if you look at that metric, and which I don't think is fantastical, that's $60 million US, based on if you just cut the existing spending and cut it in half. So once again, you have a 5x or 6x type differential between where our current share price is. So, and I really believe that those things they're valid, and I think that they know internally how much failure there's been, and to find something that's got 5 or 10 billion pounds, there's a lot of misses along the way, let alone all the different other pitfalls that you have that we talked about already.
Yeah, I guess the proof's going to be in the pudding for when the market recovers, when you're able to have conversations with groups who are looking for copper projects. I think you're in the right jurisdiction for sure, and there's a lot of data and a lot of money being spent. And only kind of when you get into the weeds with them will you have a better idea of what this could mean for you, given that you're not the guys who are going to be developing the projects. It's going to be someone else. I'm interested to see what type of deal you can construct, whether you get carried, whether you get some cash up front, whether it's a long lead return time, depending on how much money they spend each year.
It will not be a long lead return time. I'll say this unequivocally. Frank Holmes and myself were the 2 largest shareholders. It's a return of capital outside of share price appreciation. And we have the tools to be able to do that. So picture in the theater of your mind, this is a forward-looking statement. CopperBank has 4 divisions. We've got our holdings company, which does own real estate. We own a couple buildings. We own development land or other things, right? So that we keep that. We're not going to sell that. We have the royalty business, which is organic. We can attribute a 1 or 2% royalty to both of our projects. That's something that has more value when there's a partner that can take it to the finish line. Because right now you have to discount that dramatically to some point where it has very small value, which is why we're not going to be like the other junior companies that sell for peanuts a royalty that, when it would be a project in operation is worth some hundreds of millions of dollars. Why would you sell that for $1 million? Makes no sense. We will not do that. We'll keep that for the shareholders. But when it's the right time, we will spin that out and we will give that back to each shareholder. And they're taking me to task, all of my key guys. And then we have the projects. So if and when we're to move that forward, we're highly motivated to create a share dividend, or if it's cash, it's a return of cash. Keep some of that in CopperBank, which then fortifies the holding company that would have cash and holdings. And you can repeat that process with both Copper Creek and Contact. So there really is 4 different individual types of businesses. So if you take our market cap of 11 million or 12 million US dollars, and I could forcibly do this right now. For me to spin out the royalty company would not be complicated, wouldn't be expensive. And I believe it's worth more in the future. So the market will decide what that's worth if it was spun out. And same can be said for both Contact and Copper Creek. And if you look at the market cap high, so what did I buy? Copper Creek was owned by Red Hawk. Previous market cap high, 120 million. International and Exco that own Contact. Look, they were raising money at $4 a share previously, once upon a time. We bought them for, it was on their share price, it was 15 cents. So it's unbelievable that how manic this market is. It's just incredible.
It is all about cycles, timing.
Foggy. I know it's kind of a complicated story, but people have to look at it in a simplistic way. If you allocate $1, can you make 5?
There you go. That's what it's about. Just one last one. So what's the next big move for you, or is it really is a sit and hold and wait strategy?
We've got feelers out there to buy other things, but I am a speculator. I invest in other companies as well, and I've taken some 3 and 4% positions in other holdings, and they're cheap. So I think I'm gonna ride that out. And I'm captivated with helium.
Yes.
Helium is such an interesting commodity. So I've taken a big stake in a company called Desert Mountain, who's going to be drilling in Arizona with the highest grade helium ever produced, 8 to 10%. So that is just a classic speculation, and we'll see how that goes. But I tell everyone, helium is something that people should do some research on, and lithium. I think lithium is something that is going to be with no matter which battery chemistry they go with. All these other global firms, the common bond is going to be lithium. So I think I'm going to go in the way of direct lithium extraction, not hard rock mining, not the salars of South America, but can those technology companies crack that code? So privately, I own over 1 million. I have access to over 1 million acres in Alberta of lithium petrobrines, and that's in a private company called Lithium Bank, and that'll be coming to a theater near you, and that's a very exciting opportunity. So I'm the largest shareholder of that as well, and I follow a couple other companies, Philo Mining, Ross Beatty's Equinox I like, so for a little portfolio. And I love Robert Friedland's Ivanhoe. I think that's an absolute no-brainer. So it's not just about CopperBank. I'm an investor. Your viewership are investors as well. Those are 10 interesting companies. And I was very impressed with Alex Black, his Rio. I missed that one when it got down to 16 cents. Boy, I would have bought the hell out of it. but that looks interesting. I think that one at 50 cents is good speculation.
Brilliant.
There you go. It's not all about CopperBank. It's about a portfolio. Don't put all your money into one company.
Good advice, sage-like advice, and I agree with you. Gianni, stay in touch. Let us know what's going on, especially helium. I'm a big fan of that too. I think it's certainly worth looking at.
Oh yeah. I can connect with the guy. I think that'd be a very. If your viewers would really like that interview, I think that'd be a good one.
Do it. Make it happen.
I will.